story, the top story of the day, or probably for the week. Earlier today, we told you that SEBI is barred US trading from Jane Street, from Indian markets, in a 4,843 crore scam. And actually speaking, if you look at the net profit that Jane Street has gotten, it's 36,000 crores over 2 years. But what does this mean? I mean, and is there a different way to explain this whole thing as well? So I think that's what my colleagues are trying to do. So let's get in Alex and Sajid to explain the modus operandi of what Jane Street has done or did. And Alex, I'm interested in knowing, Jane Street spoke about 36,000 crores. Why do you have a tomato ketchup and a few tomatoes in your hand?
So I must say that I'm going to be using this over the weekend, but it's also a prop. But having said that, this explanation is meant to give people an idea of what has happened, even if they don't completely understand derivatives. Let me put that as a caveat first. And I must also state that this is not original thought from our end. It is something that has come from an explanation by Kribakaran Rajendran on Twitter. I'm just utilizing what he has already said. But here's the thing. Let's talk about what I have here, right? So I have tomatoes, half a kg, which is something that I bought on a quick commerce platform, and ketchup, which my wife will be very happy about. But imagine that tomatoes that I'm holding are representative of several tons of tomatoes, okay? Now, I have gone out and bought several tons of tomatoes. What happens to the price of tomatoes? It goes up. Because ketchup is made with tomatoes, the price of ketchup also starts moving up. Now, when that happens, when everybody thinks that the prices of ketchup are going to be high, in the derivative market, now imagine that there is a derivative market for ketchup as well, what happens is that the price for calls of ketchup go up and the price of put for ketchup go down. So I buy a put, I sell a call, because I think that the prices are going down. Why do I think that the price of ketchup going down? Because I know something that nobody else knows. And that something is that later in the afternoon, I'm going to dump all of the tomatoes, the many tons of tomatoes that I have bought, at a loss. And what happens is that the prices of tomatoes fall, the prices of ketchup also fall, and that strategy that I had, the derivative contracts that I had, I reverse them, because what happens when ketchup prices suddenly fall is that the price of the put goes up and the price of the call actually comes down. So this is a very simplistic example of what has happened on several expiry days. But for you to understand what has happened with the bank nifty, perhaps, Sajid?
That's right, Alex. That's very simplistic and not the complex F&O which we normally trade in. But what happened as part of the strategy is very simple. In the first phase, you have the stocks which are comprising of the bank nifty being bought, or the stocks futures of those bank nifty are being bought, as a result of which the index goes up. So when Alex is talking about tomatoes, the price of tomatoes going up is because of the kind of demand which is now coming in, and it goes up there. Simultaneously, what happens is that they go and sell the bank nifty options. In that case, what Jane Street has done, as per SEBI, is that they have cheaper put premiums, so they go and buy the puts and they sell the expensive call premiums. So there's that trade which is coming in. In the afternoon is the reversal of the trade that happens. They reverse the entire cash market position and the futures position. So when they bought in the morning, they're going to sell it down, and when they sell down, the premiums get impacted because the index gets impacted because of the sell. So the premiums which were low in the morning shoots up for the call, and the premiums which were high in the morning for call falls down for the call, and they reverse the trade, and the differential in the premium is what they make in profits. In the process, they make a small loss with respect to the cash market and the futures trade that they have done, but the profits in call and put differential, premium differential, is very high, that it takes over the entire, it takes care of the entire losses that come into play. So that's the strategy which was played by Jane Street, and that's one of the strategies, because SEBI has only done an exercise for 21 days. This entire deal or trading was happening from Jan 1st, 2023 to March 31st, 2025, and 21 days is the only one which is done. They've also done some other strategies where they go and sell the bank nifty at the end of the day towards the last half an hour, so that the index falls down and they make profit because of that. And in some cases it's done with the nifty options and nifty futures as well, where they buy and sell nifty futures and create a volatility in the index in the last half an hour of expiry, and that leads to the premiums shooting up, or and the differential is what they make in profit. So the total profits, if you look at what Jane Street has garnered, is around 44,358 crores during that period. In the stock futures, they made a loss of 7,200 crores. In the index futures, they made a loss of 191, and in cash market, they made a loss of 288. So on a net, what Jane Street made was roughly around 36,671 crores in profits. And that's the profits which Jane Street made, and that's the loss which the retail investors made on the other side, because they were the losers at the other side.
Sajid, I find myself with tomato ketchup that I don't necessarily need. I will trade you for a dozen eggs, which I can use over the weekend.
And that would be another strategy for that.
But that won't make a wife too happy, Alex.
That is true.
The question is, though, are you wanting to buy a call option on that trade of Alex? I'm willing to buy the put on the other side.
Well, I don't do derivatives, Neeraj, so I'll stay away from this.
Which is what most retail investors should also follow.
Yes.
But anyways, that's a very innovative way of explaining, and at a very detailed explanation factually by what Sajid has done as well. So Alex and Sajid, thanks so much for putting this into the book. We need to take into a break, but we leave